Did you guys know that the big banks are shaking in their boots again? Because the Fed's gone and hiked up interest rates. This is a big deal, not just for your typical Wall Street types, but for us in the crypto world too. While the banks are doing their usual panic dance, things are getting pretty exciting over in crypto land. There's a buzz around Bitcoin, altcoins are making waves, and the timing with the Fed's move? Now that's something to chew on. In today's chat, we're going to dive into all of this. We'll talk about why the Fed's move matters, what's going on with Bitcoin, and the altcoin news you should have on your radar if you're thinking of investing. So stick with me to the end, and if you're digging what you hear, go on and smash that like and subscribe button, will you? Especially if you're new here. Don't forget to turn on those notifications. Just a heads up before we dive in though, investing in crypto can be a wild ride. You might hit the jackpot or you could lose everything. So remember, this isn't financial advice, it's just a friendly chat. Always do your homework, and remember, you're investing at your own risk. Now, let's get to it. Well, the first thing is if you've got a mortgage, car loan, or credit card in the U.S., brace yourself because you're going to be shelling out a bit more. The big guys at the Federal Reserve have upped the main interest rate for the 10th time running, this time by 0.25%. But wait a minute, there's a twist. It seems the Fed boss is hinting that the rate hikes might hit the pause button soon. They didn't decide to stop just yet, but there's a hint of change in the air. Back in March, the Fed statement had this little bit saying that they thought some extra tightening up of policy might be on the cards. Now, poof, it's gone. Instead, they're saying they'll look at a bunch of factors to figure out if any more tightening is needed to get inflation back to 2% over time. It's a pretty big switch. They're not predicting anymore. They're going to wait and see how things pan out. But here's the kicker. Is this a case of too little, too late? Just as the Fed was making its big announcement, regional bank stocks started nosediving. Only hours after PacWest, the big regional bank, said they're looking for a buyer, their stock is down 57%. Other banks are taking a hit too. All this happened just a couple of hours after the Fed told us the system is strong. And let's get real here. The Fed had a big hand in causing these problems in the first place. Just a couple of days ago, the Fed had a tough choice. Either back down on their attempts to cool inflation or risk the global banking crisis getting worse. They decided to stick with fighting inflation, a problem they helped create. There's no doubt about it, the Fed's actions, like pumping the system full of cash for over a decade and then suddenly changing course, have had a big impact. So in a nutshell, what Jerome Powell, the head of the Fed, gives us with one hand, he takes away with the other. Well, the Fed's trying to sort that out, but here's the catch. It also means things like mortgages get more expensive. Remember when a 30-year fixed mortgage was around 4.16%? That was just a year ago, before all these rate hikes started. Now it's shot up to 6.43%. So what does that look like for you? Let's say you're going for a $500,000 loan and you're putting 20% down. Well, you're now looking at nearly $600 extra every month. Ouch, right? And it's not just mortgages. Last year, you could get a new car loan at about 4.5%, but now it's close to 7%. If you're taking that over 6 years, you'll be shelling out another $63 each month. Don't get me started on credit cards. They were averaging 14.5% before all this rate hike business. Now they're over 20%. If you've got a $2,000 balance and you're just paying the minimum, you're going to need 11 more months to clear that. All this because the Fed is trying to beat down inflation. And what about Jerome Powell, the guy at the head of the Fed? He did talk about whether we might see a recession later this year. He said that while there's too much demand in the labor market and wages have been going down a bit, which he thinks is good, he still thinks it's possible we might have a recession. But don't worry too much. He thinks it's more likely we'll avoid a recession than have one. And even if we do get one, he's hoping it'll be a mild one. So fingers crossed, guys. Next, we have some good news, and that is Bitcoin is trucking along and is about 75% of the way to its next halving. But hold up, there's some fresh off the press stuff you gotta hear. Alibaba Cloud just built a metaverse launchpad on Avalanche. Yup, you heard that right. Alibaba Cloud, which is part of the mega Chinese tech giant Alibaba, has whipped up this launchpad for businesses to create their own metaverses using the Avalanche blockchain. If you're sitting on some Avalanche, listen up. They've named this platform Cloudverse, and it's an all-in-one platform for companies to create and maintain their own metaverse spaces. They're trying to find new, fun ways to connect with customers. While Avalanche provides the tech for building these metaverse spaces, Alibaba Cloud's gonna handle the computing and storage. So if you're into Avalanche, you're gonna love this. In addition to that, another DeFi wallet, Arix, has launched gasless swaps. No more needing ETH for gas fees. The RX Trade Protocol would let users swap any asset even without ETH in their wallet. So how does this magic work? Well, we all know the problem they're fixing. If you've ever used a DeFi wallet, you've probably run out of ETH at some point. You can't just trade stablecoins. You need ETH in the wallet for gas. RX has a solution with gasless swapping. You swap one token for another, and the protocol converts a bit of the first token into ETH for network fees. Your swap happens smoothly, even if you've never owned ETH. To see how it works, you have to go to the RX wallet, and even if you don't have enough Ethereum for the network fee. But with RX's gasless swaps, you can swap USDC for Ethereum, use the gasless feature, and bam, gasless swap can be done. The end total would be less than your total because of the network fees that were taken out. The next newsreel is about Coinbase. The U.S. court has told the SEC they've got 10 days to respond to Coinbase's allegations about how they're applying securities laws to digital assets. Now, the ball's in the SEC's court, like legally speaking. What does this mean for us? Well, we should have some clarity within the next 10 days. The SEC's got to explain whether they're really providing clear guidance. And while all this is happening, Bitcoin's just doing its thing, ticking away. It's now 75% of the way to its next halving. Let's take a look at how things were at this stage in past cycles. Every 4 years, the reward for mining a Bitcoin block gets cut in half, which means less supply getting into the market. While Bitcoin's total supply is fixed at 21 million, the last Bitcoin won't be mined for over 100 years. Roughly every 4 years, this supply faucet gets halved. So what does that mean for you? Well, if you're holding Bitcoin, this is all about supply and demand. If the demand for an asset stays the same, like if we don't get any new people on board and the supply gets cut in half, the price goes up. It's just basic economics. If we look at past halvings, we can see that a bull run usually happens about 12 to 16 months after the halving. In 2012, Bitcoin climbed to the next halving and bull run when it was 75% of the way through the cycle. After the 2016 halving, the excitement peaked a little bit early. Bitcoin topped out a couple of months after the local top, then fell pretty much until the next halving, followed by a rally. And now, here we are today, 75% of the way there. So get ready for it, guys. And that wraps up today's video. We really hope you found it informative and learned something new. If you have any questions or comments, feel free to share them in the comments section below. Also, don't forget to subscribe to the channel and hit the bell icon if you haven't already so you never miss out on our daily informative videos. Thanks so much for tuning in and best of luck!